This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. So I got this wild idea. Well, it's not that wild, but I got this interesting idea. Well, maybe you don't think it's that interesting, but I got this idea that I wanted to go to a trading associate, a trading friend of mine, Steve Burns, who's been on this podcast many times. And Steve got his start reading books, reading trading books, hundreds of them, 400, he has told me. And so I said to Steve, what are your top 10 trading books all time? Let's have a podcast episode about those. Let's discuss them, why they're in your top 10, what makes them in your top 10. Let's just have a chat. Let's have a conversation. Let's dive in. So that's what we do today. Steve Burns' top 10 trading books of all time. Without any further delay, let's jump right into the conversation and get under the covers and learn a bit from Steve Burns about his all-time top 10 trading books. I hope you enjoy. I don't know where we're going to end up going exactly today with Steve, but I'm excited about this because it's kind of something new for me. Instead of just doing a straight interview, Steve and I are going to jump into things, authors, books that have interested us for decades. So Steve, thanks for joining me today to run around the maypole, so to speak, and talk about some of these trading books that everyone loves.
Yeah, I appreciate you having me once again. Good talking to you.
So listen, let's just start with the number one trading book. And I think it's fair, just probably on sales alone, I think it's probably number one, which is Jack Schwager's Market Wizards, which came out in either 88 or 89. It features some of just the most interesting voices in the history of trading, doesn't it?
Yeah, it's amazing that it exists. Any genre that somebody did interviews with the best traders of that generation in real time and got them all to open up and talk to them. It's pretty incredible. Just name a few of the big ones. Paul Tudor Jones, who later became one of the richest people in the world, maybe top few hundred. Richard Dennis, the guy you're very familiar with from the TurtleTrader's fame. The legendary Ed Seykota, Larry Hite, other people that you are very acquainted with. I mean, it's a who's who of the trading world.
Yeah, Jim Rogers on here. I'm trying to think. So I've met Richard Dennis. I've met Seykota, met Hite, met Jim Rogers. Van Tharp has been on this podcast. I don't know if I've met him in person. So yeah, it's a heck of a lineup. I mean, all these guys, except for a few of them that I don't know really well, don't know their style. I mean, most of them are just like legends where you can pick up that book today. If someone picks up that book today and they don't think it's timeless, I mean, how much money do you think that person has? Probably not much.
Yeah. I think his goal was to make the reminiscence of a stock operator of this generation. I think I heard him say somewhere in an interview, and I think he was very successful, if not more so, in creating something, like you said, is timeless. I mean, the principles, he focuses on the principles, how they made their money, how they were successful, and exactly what they did. Like you said, it's a timeless book. Some of these stuff could be applied to cryptocurrencies to this day. So even new markets, same principles apply.
Yeah, for sure. I mean, why not? I mean, if you've got a set of rules that say, especially if it's on the trend side of the equation, the price action side of the equation, if you got a set of rules, who cares if it's crypto or whatever comes after crypto, right? I mean, it doesn't make a difference. I'd be curious to know how many crypto people actually know of something like Market Wizards. It does seem like some of these books, and it's kind of surprising to me, I feel fortunate, I feel lucky, some of them, including myself, mine, have started to get insane numbers of reviews. Like, I didn't look at like some of my books on Amazon for like years, and then all of a sudden I go on there and I'm like, where do those reviews come from? Like, what's going on here? Like, it seems like that the more the world is connecting, and you know this, especially India, all of a sudden everything is just taking off.
Yeah, it seemed like the pandemic jumped us ahead maybe 5 to 10 years as well. All the traffic on everything was hockey stick charts once the pandemic started. Everybody was locked down and had nowhere to go but online and Amazon and read. And you could download Kindles, not have to worry about even getting a book shipped to you. I think it really changed everything for, like I said, volume, sudden volume.
In the Market Wizards book, Jack's book, I think you mentioned him first when you were going down the list of traders. Is Jones one of your favorites or the favorite at the top of the list?
Yeah, he may be. Paul Tudor Jones, especially his documentary, The Trader, the PBS did. I mean, that's on my favorite watching of anything. You have a guy sharing it, and he regrets it, and he uses his interns to get rid of all the copies that exist online. I think he bought the copyright, so he hates it, but I love it.
I'm like you. I mean, I'm never going to give up my copy, even if Paul comes after me. He'll have to find out what hard drive it's buried on, wherever. I haven't tried to look for years. I remember having this conversation with Peter Borsch many moons ago, and I said something when it was first starting to reappear, maybe like 10 years ago. And I said something to Peter, and Peter was very blunt. He's like, Paul doesn't want that out there. Something to that effect. I mean, I don't want to attribute too much to Peter. He might kick me in the butt, but it was something to the effect of like, Michael, don't put that out there, something like that.
Yeah, that might be where I actually heard that from your podcast. I remember distinctly hearing that I don't know what exactly it is he hates about or doesn't like about it. I mean, I'm sure
that's
the level he rose to. Yes, it's classic. It's probably the best trader documentary ever created, and he doesn't want it out there. But yeah, him and the quotes that he had on there, some of those were life-changing quotes for me inside the documentary. So it was great to have another interview from him. To me, like Ed Seykota in this book, it's almost like he's talking to a trading Yoda, where Luke Skywalker goes to the swamp with Ed Seykota giving the way he does this interview in this book is amazing.
I liked a lot of the guys in there, but I think for me, it was wrapping my arms around Seykota's pearls of wisdom, that everyone, I'm paraphrasing, everyone gets what they want line, which if you've not heard that before, Ed Seykota's famous line about it, and I might not be saying it right, but everyone gets what they want from the market. So if you're a constant loser and you constantly lose money, you actually want that. Now think about that. If you've never heard that before, wrap your arms around it, but it's 100% true. It's very Zen. It's very Ed Seykota.
Yeah, it's so much wisdom. Ed Seykota's interview and a lot of his other stuff he's on his website transcends even trading. He gets deep into psychology and a lot of the math. It can change your life in a lot of areas. If you can listen to Ed and trade the way he shows you and focus on his principles, it can also change your life as a side effect.
I just had a conversation the other day for 90 minutes with Larry Height. It wasn't for a podcast, but I ended up throwing the recorder on, and I'll ask him if it's okay to put it out eventually. I've got probably 10 of these things from Larry over the years that I've recorded but never used just because we were just shooting the shit or something like that. Shooting the shit with Larry always becomes, Larry's not the kind of guy that gets on the phone and starts talking about all kinds of personal stuff. That's not his MO. He goes, religiously straight to trend following principles every time. When he might use other analogies and whatnot to bring it back. And he is 80 or 81 years of age now. He is laser focused. It's unbelievable. I mean, I told him the other day, I said, Larry, what are you doing? Like, why do you sound so good? Because I've been talking to him on the phone or in person for 15 or 16 years. I said, well, you sound great. What the heck is going on? He's like, I've been working out a lot. I'm lifting weights. I think he said he's deadlifting a couple 100 pounds or something now. I mean, so I was like, dude, you're on fire.
I hope we can all be that good at his age.
Yeah, seriously. By the way, I don't think I said this at the top. What we're going to do is we're going down the list. I hope people don't think this is self-serving. Well, I really don't care if you think it is self-serving, but I'm going down the list of what Steve Burns feels are his top 10 trading books. Steve has been at this process of, let's just say starting with reading and then analyzing and writing. So reading trading books, analyzing trading books, writing reviews for trading books, writing his own trading books, and doing this for a long, long time. My idea was, let's get Steve on and just go through his top 10 books, top 10 trading books, and kind of just discuss things just like we're doing right now. So that's kind of the delayed, and I'll say that in the intro, but that's our kind of my delayed setup. For all of these books, if you don't own them, and again, someone's going to say, well, Mike, you're trying to sell books for yourself. Okay, I don't really care. I've sold a lot of books, so a few more, whatever, If you don't have these books that we're going to go through today, you're kind of missing something. I mean, I give Steve a lot of credit. I give you a lot of credit. Steve, you are Steve. I give you a lot of credit because, especially the ones that are not mine, these are classics. Number 2 on this list, as I get to self-serving, and this is not a setup. Anyone that wants to Google and follow Steve Burns will know that he has been saying nice words about my book, Trend Following, for a long, long time. I've never paid him anything for all this praise. I'm just appreciative that he likes it. I don't know if I've ever asked you why you like it.
That's a good question. I think each edition gets better. Your last one is just a monster. It's the Bible of trend following. It probably physically intimidates readers. It really changed my life reading Trend Following, because you go like to the other level, like the market wizards and the interviews. I mean, you also did your own interviews and your own talks, and you went and got inside your own doors to quantify the principles of trend following from the sources as well. You go into the principles. I mean, it's the blueprint for making money in trading in any market by following the trend. I think in your book itself, which I've heard you say many times, is the term reactive technical analysis. I think you invented it. I've never heard it anywhere but from you, reactive technical analysis. So people, it blows their mind. What does that even mean? It means reacting to the current price action based on a signaling system, not trying to predict what is going to happen. Almost all of classical technical analysis is a predictive course in trying to figure out and see the tea leaves and look in the crystal ball and have an opinion and predict and figure out all these complex economic things coming together and what everybody's going to do, which is virtually, for the most part, impossible consistently. So reactive technical analysis is actually creating a price action system where you're taking signals. Like a classic trend follower, they may buy a breakout of a 20-day range, and they might sell when it's a breakdown out of a 10-day range and just follow the trend. Follow higher highs and higher lows, or short lower highs and lower lows. It seems so simple after you study it for a couple of decades, but most people, it baffles their mind. And your book goes into each step of that. How do you get a watch list? What markets do you trade? How do you deal with volatility? How do you deal with the unknown? Risk-reward ratios, letting winners run, cutting losses short. I mean, your book is the Bible for quantifying the successful process of trend following, which cuts through all the bullshit and shows what the real wealthy traders who made tons of money used to make the money, not somebody's opinion.
There were a couple things that I thought were unique. And look, of course, if I'm going to write a book, and this first edition came out in 2004, if I'm going to write a book, I have to compete with the people that came before me, which are many of the books we're going to talk about today. I was thinking, well, what have they not done? What did they not do? For the trend following book, my trend following book, I think the key 2 things that I first put in there was performance data, so people could actually see what some of these great traders had done. And that was eye-opening because there's all kinds of lessons in the performance data. If one doesn't understand that there are lessons in performance data, you might also have already had your frontal lobotomy and you're not really clued in. But yes, there's a tremendous number of lessons in performance data. Number 2, the foundation of that book was really me figuring out that John Henry, who owns the Red Sox and the Liverpool football team, was figuring out that he was on the opposite side of the Barings Bank scandal. So Barings and Nick Leeson was long the Nikkei and John Henry was short. And when I figured that out, I was like, wow, okay, let's build a book around that. And everything else just kind of fell into place, so to speak. But those ideas, the performance data and John Henry, and then everything else kind of built around. So that was kind of how that came together. And a lot of this was, frankly, I had built around a blog first. It was kind of like immature writing, because like if anyone knows anything about writing, and you definitely know a lot about writing, when you first start writing, you're pretty shitty at it. I mean, I was pretty shitty at it. You get better. That's why I keep doing new editions, because if you get better at it, you might as well keep doing a better edition. I mean, I'm not Christopher Hitchens, who just was like putting out prose at like age 25 or something. Like, I mean, practice makes perfect, right?
Yeah, if you get the feedback loop, same thing with trend following, you get into a feedback loop, you can improve. If you have a feedback loop, other people just keep on grinding out doing something. And it's like playing golf. You have to improve your game by learning what you're doing wrong and making it better. People doing the wrong thing over and over doesn't help. But like you said, both of us have been on a journey now for a long time, improving our processes and everything we do.
Look at that. So people should be proud of me. I did not sit there and just stay on my book forever. But number 3 on your list is Trade Like a Casino by Richard Weissman. Richard is actually, he's been on my podcast, was introduced by you, I'm pretty sure. And you guys have been acquaintances for a long time, yeah?
Yeah, we've had a lot of correspondence, Facebook friends, had a lot of correspondence. Almost met up once in Nashville, but the opportunity slipped by us. Yeah, I tell you, from a one-on-one perspective, he's really helped me and changed me more than anybody else. He actually gave me a free consultation. He's a professional trader. I think he's still running a hedge fund right now. I know he's managed money. He teaches at the professional level, but one-on-one consultation that was very helpful to me a long time ago. I believe his casino paradigm as a trader is another one of those life-changing principles if people can wrap their brains around. So many people think that traders are gamblers. That's the first thing you hear when you trade, and people say, oh my gosh, isn't that just gambling? Well, yeah, if you're just randomly doing things that make no sense and have no edge, yeah, you're gambling. It's like you're walking to a casino and you're gambling. Nicholas Taleb said, what's the best way to make money in a casino? Own the casino. Casinos operate with a mathematical statistical edge with table limits to manage their own risk, and they slowly take money from others because they know the probabilities and the betting limits, and they have the edge while the gambler does not. The gambler does not understand the odds. The casino does. So the casino paradigm in the book is about creating your own statistical odd and become your own casino and know what the odds are and trade with the odds in your favor. And he's the one that really taught me the important lessons of having a positive expectancy model and having an edge, a repeatable edge.
What's interesting too, just for the first 3 books that we've talked about, they're all sliced from the same loaf of bread, so to speak, but they're very different. I think the audience will find this with all the books we're talking about today. There might be some massive similarities, but they come at it from different angles, different vantages, different stories, different unique ways of getting people to find understanding. And I think it makes a lot of sense to kind of pick your 5 or 10 or 20, or in your case, 6 million books to read. I think you just made that as a challenge to yourself. There's going to be patterns. You're going to start to see what are the commonalities. I think Richard does a great job of that. It's all the stuff that you have to have if you're going to succeed.
Yeah. And like you said, these 10 books could be the only ones that they need to read. If they want to drill down deeper, they can read the other books by the authors. Swager has hedge fund wizards and stock market wizards. I mean, you can drill down.
They're all good too. I was going to say that at the top. I mean, his stock market wizard. Well, I haven't read stock market wizards, but I've read hedge fund market wizards. I've read unknown market wizards. Both of those I highly recommend. To me, they seem as good as market wizards.
Oh, absolutely. I was stunned at how well he did unknown wizards after doing all these other books.
That was great. I mean, that was especially interesting because the styles were so terribly unique and you didn't walk away necessarily having any idea what they were doing, but it was still amazing stuff. 4th on my list, or 4th on your list, I should say, 4th on my, by the way, I usually don't print out stuff a lot for interviews. I mean, I really don't have any questions. For this, I printed out all of this stuff. I wanted to refresh and see what all the covers looked like. Just because I know that they all look like from memory, but I wanted to just be able to see them again, right? I'm looking at right now the new Trading for a Living, which I don't think I've ever read. I've read the Trading for a Living, his original one, which is Dr. Alexander Elder. And he has been on this show a couple times. Super interesting guy. In fact, I'm telling you what, he's probably one of the guys I wish back in the day I could have toured around somewhere in Eastern Europe with him. Probably would have been an absolute blast. He seems like just a really cool guy.
His story, I don't know if you're familiar, I think he jumped a Soviet ship to get to America.
Yeah, that's right. It's a fantastic story.
Yeah, and practicing, was it a psychologist or psychiatrist? He's a medical professional. He's a doctor.
Yeah, and he came at it, whereas I might have started straight in the speculative mindset. He really approached it straight from the psychology perspective, the book, Trading for a Living, and then slowly through the chapters worked its way back to where here's the technique, here's the thinking, etc.
Yeah, I think the core to his book that really changed my thinking, and he's always been, I've had a lot of correspondence with him. He's always been very generous and friendly with me. I think I started chatting with him 16 years ago now. He calls it the 3 legs on a stool: money management, mind, and method. If you do not have all 3, you will fail at trading. And like you said, he focuses so much on the mind. He even says traders need to go into the 12-step Alcoholics Anonymous to stop having addiction of losing money. He explains if you don't have the right mindset and psychology and the right risk management parameters and a method with an edge, then you can't make money, and you need all 3.
I think also that particular book, I don't know how many copies he has sold, but I bet it might be right behind Market Wizards or maybe ahead. I don't know. Just the idea of, I'm talking now from a marketing perspective, but the idea of trading for a living. I think that gosh, when did it first come out? I remember seeing maybe was it come up the late 80s, early 90s? I mean, it's just been on every shelf for everyone for a long, long, long time.
Yeah, he was one of the first in the space. I actually had a blog post about the best-selling trading books of all time through Book Authority, and they rank I don't see it on there, but it's got to be in the top 15.
I think he's had a great life and how he's done things and how he's run things. And I just think it's another one of these books. And we've talked about 4 of them so far. And look, the idea here wasn't to necessarily go into the nitty gritty on all of these books, because all of these books are, I mean, this is extreme detail. I remember the first time reading Market Wizards. The first time I read Market Wizards, if you have no real experience with trading, Market Wizards is like reading Egyptian hieroglyphics. I mean, it's dense. You got to know what's going on. Or if you don't know what's going on, you're going to have to like, okay, I got to go search that. And before search engines, I got to go figure out what that means. I got to go figure out what that means. But once you figure it out, it's like a light bulb. And I think that's the same for all of these books. There's this tremendous amount of depth that you and I are just kind of like, we're just reminding people today they need to check these out. But let's go into book number 5, which is another good doctor, also from the psych space, Van Tharp. Was he originally in Market Wizards or New Market Wizards?
I think he was actually one of the last ones interviewed in the original Market Wizards.
Yes, you're right. You're right.
I think he was talking to you. Did he tell you that he was almost one of the original Turtles too? If I remember that correctly?
Yes. I don't remember exactly where he got in the process. I think he went for the interview. He didn't get hired, but I think he went for the interview, which meant he was a rarefied air, that he obviously knew what Richard Dennis and Bill Eckhart, the fathers of the Turtles, were looking for. So yeah, that's a really interesting story. In fact, it's funny. I mean, I don't know how many people went for the interview and didn't get it, but I think Van is the only one who's actually raised his hand and said, I was one of them, which is interesting.
Yeah, I think that was in your interview. I was fascinated to hear that from him. He does such a great job in that book, really getting into all the positive expectancy models and the breakdown step by step, every angle you could hit trading from on how to be profitable. I think that one of the big spots in that is his marble game. He actually goes into the marble game where you use marbles to define position sizing, and shows if you have different position sizing on the same trading system, you can have completely different results. It's pretty incredible. To quick lesson on the crucial importance of position sizing, which Etsukoda also agrees with, saying, the risk management process embedded in a system will determine its success more than anything else. So I think, whatever Etsukoda's quote was, it's very similar to what Van Tharp does with the marble game, which that one thing can change your entire viewpoint on risk and position sizing.
I think he's actually, I don't know if he trademarked it, but I think he's the first one to familiarize it, the first one to make it popular, which is the phrase position sizing. I think Van was the first one to do that.
I think he has a book with the name.
Yeah, I remember also seeing some of his early position sizing work, and it was great. I took away a lot from that. That was just great stuff. Hey, let me stop for a second and kind of pick you a little bit. Do you recall your first trading book?
I started with investing and mutual funds and different things, and I got into trading after being really successful in investing in the early 2000s. It's either How to Trade for a Living or Trend Following. One of those two were my first trading books.
Mine might have been Market Wizards. By the way, what are the big picture reasons that the books that we're talking about so far and the books we're going to keep talking about, what are some of these big picture reasons that you like these? I mean, what's the similarity in your mind? I mean, I can give you my point of view, but I want to hear your point of view.
I think it's just cutting through the bullshit. It goes to sources of what really causes profitability and professionalism, not just the bullshit, getting my Discord or get signals, or just the bullshit you see online with people you don't know them from Adam, and they act like they've got some secret core to trading and they never lose, or some foolishness. Like, this is the leaving that zone and getting into the reality of what the real traders that really make money, like you said, to size, owning the Boston Red Sox, becoming billionaires, running billions of dollars in capital, what they really did. This is the real deal. This isn't the content writers writing books, dummies guides or idiots guides. These are the people that went to the source and the core of real trading.
You use the phrase billionaire, and I do too occasionally. There's nothing wrong with that goal. I think the trick for people to think about, though, is you might use the same techniques, you might use the same trading philosophy as a John W. Henry, as a Paul Tudor Jones, as an Ed Seykota. That doesn't mean you're going to have the same success as them, because it's just life is random. However, if you follow their same types of principles, it's hard not to guarantee that you won't have a great life. Meaning, maybe you'll make more, but the chances are you're going to make less. But even if you make less, it's still 99.9% more success than the average Joe who's clocking in 9 to 5 at Starbucks.
As well, if people don't understand too, you have to have a lot of capital to trade. If you're going to make 20, 30, 40% a year, which is some of the top end of some of the best traders in the world, which people also have a hard time understanding, is you need a lot of capital. Your returns will be based on how much capital you can trade with. People trying to come in with a small amount of capital and think they're going to make a living off of it is just absurd. I mean, if you're getting up into 30, 40, 50% returns a year, you're one of the best traders in the world, even at a smaller size. You have to be properly capitalized. In the Ed Seykotas and the market wizards and the trend followers, they're managing large amounts of capital. They're becoming billionaires by managing billions of dollars in capital. And the scalability of their systems is there. That's one they can do. And people really have to have a firm grasp on the amount of capital they need to get their goals. And the compounding will do magic. You just simply compound your capital wherever you start year after year. That's where the magic can really happen over the long term without just giving it all back. If those standard people's bear market in the stock market and just holding it and just giving it all back.
It's funny you bring up the idea of starting capital. Somebody texted me the other day and they were asking a question about trend following, starting capital. And this person who had sent me several emails seemed intelligent. I mean, they were intelligently written emails. And this person said, well, I've saved $200 over the last 3 years. And at first I thought I read this wrong. I'm like, okay, this seems like a really intelligent person. And so I think it maybe means 20,000 or 200,000 or something. So I wrote him back and I said, are you telling me you saved $200 over the last 3 years? And he wrote me back and he said, yes. And I said, I don't think this is for you. Something's going wrong. Like if an intelligent person has only saved $300 over $200 or whatever over 3 years, something's screwy there. I actually, in the side of my head, I thought to myself, hey, what is this? Some kind of like FBI sting operation to get me to say something stupid, What intelligent person says they saved $300 or $200 over 3 years? I mean, who says that?
A lot.
God, it's crazy.
I remember people I know in a personal life come to me saying, hey, I saved $1,000. What can you do with that? What can I do with $1,000? I can tell you to fold it in half and put it back in your pocket and go put it in savings. To come into a professional endeavor like trading and to take, to me, like for you, it's like to take light of it. Like when people say, hey, can you tell me how to trade profit real quickly? Hey, can we jump on a Zoom call and you explain it to me?
But hold on, you're not trying to be cocky. I'm not trying to be cocky. We're not trying to make fun of anybody for where they are in their financial situation. However, if somebody is truly intelligent and after 3 years, they've only saved $200, something's wrong there because you don't really want it, or stop thinking about trading. Go figure out how to make money first or something. I'm not being a jerk. It's just kind of wacky to me.
I was there. I started very humble beginnings and built up and grew myself to where I'm at now. So, I completely understand starting from nothing and grinding my way up. What I've learned, people have to first, they may need to go to Dave Ramsey before they come to me. They need to build up capital, save money, have an established career, have cash flow, and grow money.
Get rid of debt.
Yeah, get out of debt. Yeah, most of them. A lot of my son's friends come to me wanting me to teach trading, investing, anything, even starting in investing. And I said, the best thing you can do is to pay off your credit cards first. That's probably a 20% return just paying off your credit cards before you start trying to get into trading.
100%.
I come from a very humble background and I went through the steps myself. You have to master your personal finances first. Then you have to get up amount of capital to trade. Those are the steps before you even begin to start trading.
This next book, which is number 6 in our list, How to Make Money in Stocks by William J. O'Neill, founder of Investors Business Daily. Now, I'm going to let you do a lot of work for this one because I will admit I have not read this. And I don't know why I've not read it. Probably I've got a bias because I went down this price action direction. And my understanding is his work is blending in some other factors. Perhaps I avoided it because I had a bias and I just didn't want to go there, or I'm not sure. But you and a lot of other people, because it's sold over 2 million copies, a lot of people love Bill O'Neill and his work.
He was in the original Market Wizard book. He's a legend in the stock market world. So, you're more in the trend following and futures markets. So probably not like I thought you wouldn't be as familiar. And like you said, he has a fundamental filter.
He's still a trend guy, though. He's making his money off trends. Yeah.
Absolutely. What William O'Neill did, it's fascinating, really, a fascinating story. He studied the biggest winners in the history of the stock market, the stocks that were the biggest winners. He studied both their fundamentals from a company standpoint and their technicals from a price action standpoint. Like you said, he absolutely could be classified a trend follower, but of stocks. But he builds his watch list instead of trying to trend trade 5,000, 10,000 stocks and all the world's stocks. He filters it for the model. He has a model called CanSlim. It looks at current earnings, annual earnings trends, if they have new products, new management, new technology, new business models, if they are leaders in their market, how many shares are being traded, if there's proper liquidity, if they're being accumulated by professional managers, if they have institutional sponsorship where there's money managers continuously accumulating them to drive up price. He does have an entire model he's created for the fundamental side. He doesn't trade based on the fundamentals. He trades purely on the price action. He wants to see a trend breakout of a range. He has many different entry signals, which he even has chart patterns where he wants to see a cup and handle form where it gets sold down, it comes back to the other side, then breaks out of the handle of the cup. He wants to see it make nice bases and break out of the bases and start a new uptrend. He loves just the monster run-ups. He wants to get stocks that go up multiple times. His system, there's two other books that came out later to really drill down more into it, how to make money in stocks. One, it looks like his book, but one has a red cover, one has an aqua blue cover, but he actually goes into the system. He has about a 7 to 8% stop loss on a stock. If it doesn't trend well, he stops out at 7 to 8%, and his reward, he looks for about 25% to 40% gains. So he has a good risk reward ratio. He also runs money, and he consults a lot of professional stock managers, money managers. He has a great system, and he has other ones where he'll let things run. If it breaks out, he has rules. It's all systematized rules based on fundamental watch lists and a technical trading of the price action. Pretty fascinating. And he actually has in the book all the different best performing stocks of all time.
Correct me if was David Ryan an acolyte of his?
Yes, is one of his number one acolytes of all time.
Okay, that's what I thought. David's been on this show. I realized, look, I'll just give a tip about doing podcast interviews. When you do hundreds and hundreds of interviews, you don't forget things, but they kind of get slotted in kind of like dormant memory. And then when there's a spark, it kind of comes forward. So I say, well, I haven't read Bill's book, and I probably have, but but then we started talking. I was like, oh, come on, this is David Ryan. Okay, now I'm reconnecting the dots on everything. One thing I want to bring up, you kind of alluded to it a few minutes ago. What's interesting about the books that we're talking about right now in the modern learning environment is, okay, if you don't want to read these books, buy these books, whatever, okay, fair enough. You can go find anonymous sources on the internet, in chat forums, et cetera, et cetera, et cetera, and you can try that. I think what's happening is that we've reached a point of information overload. It sure seems like, and this gets back to me observing a significant number of new reviews for my books, is that I think the world is saying, and especially when it looks like the Jack's books, I mean, the world is saying, I don't have enough time to screw around in Facebook all day long. I don't have enough time to screw around anywhere. The world has voted that Jack Schwager's books are really good. I'm just going to cut to the chase and buy that book because I really don't want to trust some troll or some sock puppet on the internet who's not even a real person telling me something. That's an interesting phenomena that's happening now. Meaning I don't know if guys like me or you, if starting today, could necessarily get to the same place, because it seems like the world is saying, we trust these voices on these 20, 30, 40, 50 books. And the world's saying, I don't have enough bandwidth to keep going down the path for more and more and more books and authors and whatnot that I don't know about.
I feel like we've moved from the information age into the aggregation of information age. I feel like information is plentiful. The asset now is time and attention. Like you said, how do you filter? Everyone has their filters. for how to use their time most wisely, because like you said, it's free. If you want information, it's all free, all the free information you could ever handle. I've had people that write reviews from my books. Well, they'll say, oh, this is available on the internet, dismissing my connecting the dots and putting the information together in one place. And like, I'm not selling information, I'm selling time. I read 400 books. If you want me to give you a cliff notes on a topic and explain to you how it applies to actual making money, then that's what my book shows, quantifying what is valuable and what is not in the ocean of information. I'm selling you time. If you want to go do 1,000 hours of research, absolutely, you can go figure out what I figured out. But it takes a long time and energy and effort. And like you said, you have to have a filter. Like, that's the sources I went to. These 10 books show that's my sources, where I try to connect all the dots together for what works for me. People can do their own research, or they can read the books directly for themselves.
Aggregation is a great word here, and that's kind of what we're doing in this episode. I had seen some of your lists before, so I knew, for example, that I might have some books on there. I didn't question or debate or think about it. I thought, well, okay, Steve Burns has got enough people to believe in him, and if these are 10 books he recommends, I already knew that they were in my headspace too, meaning I didn't have to filter the list and go, oh God, what's that one on that list? What's that bullshit? That's complete nonsense. Why is he being paid to tell me about that? What is that crap? I didn't have to think like that. You know what I mean? That's why I thought this would be a cool conversation. It's just to kind of get an aggregation of 10 great titles. For sure, there's more. Maybe at the end, you'll have some honorable mentions. But yeah, so well, I'll tell you what, let me jump into number 7. This one's a little sad for me. Trading in the Zone, Master of the Market with Confidence, Discipline, and a Winning Attitude, Mark Douglas. And Mark passed away a handful of years ago, and I was actively exchanging emails with him, voicemails with him, talking with him, and he had committed to come on the podcast, and then he passed away.
Wow.
Yeah, that was really not good. I really wanted to get him on, but this is one of the most popular trading books in the world. And again, he's coming at it from a psych perspective as well. And he's just there's some audio and video you can find of Mark out there. And he's just a really pragmatic, down-to-earth guy. And you just walk away feeling like, whoa, you know what? I think the IQ went up a little bit today. Something like that.
Yeah, it's incredible. I mean, he does the best job of anybody in history in this book, just explaining the deep dive into psychology. One example, he talks about the 4 fears, the fear of missing out, the fear of loss, the fear of being wrong, and the fear of letting a win turn to a loss, and how almost all trading errors emerge from those fears. Like, he's the guy who invented FOMO and identified it and talked about it in depth. I mean, it's really amazing. He shifts the mindset into a model of expectancy, understanding what your win-loss ratio is going to be, so you're not surprised by losses, and understand your own emotions and how it makes you do the wrong thing. So many people just are not built to be traders. They have ego problems, emotional problems, hate to lose money, greed, fear. Dakota said they're all banana peels that you slip on. Like, people have to have control of their own mind and thoughts and behavior to trade. And this book, like you said, it's almost always pegged in the top 5, at least 10 trading books on Amazon at any given time. That's the deep dive into psychology.
Yeah, I mean, obviously, Alexander Elder and Van Tharp, they dove in too, but they add a lot more, kind of a holistic thing. Whereas Mark really, and there's a few other people that have come along that do trading psych books, for lack of a better term, but he really owns the mantle. Even though he's passed on, he owns the mantle. Like, it's hard to imagine, especially with publishers seeing how valuable these assets can be. It's hard to imagine that a book like Trading in the Zone will be super popular decades from now, I'm sure.
Yeah, it's absolutely timeless. I don't know anything in there that's dated. It's an evergreen, best book of trading psychology ever written.
Yeah, it's great stuff. I see his name and I get a little sad because I'm like, because I've had a few, who have I had on? I've had a few people on that have passed on. I mean, one of the turtles that I had on. I want to go back, though, to something, because you brought up something earlier, the idea of reactive technical analysis, and we didn't really define the other half of that, which is predictive technical analysis. Reactive technical analysis is kind of like, hey, price-based trend following. The predictive technical analysis would be Edwards and McGee and chart patterns and stuff like that. you don't know this, maybe you do know it, but you don't know it because I haven't put this episode out yet, but I had a guest on recently named Bill Dreiss. And Bill is a long-term trend following trader. He's late 70s, I think, or mid 70s. And he's been doing this since the 70s. So he's one of the early pioneers right there with all the names that everyone knows. I've known about him for a long time, but I just didn't get him on for whatever reason. He went ahead and he looked at all these predictive technical analysis books with all the patterns and charts. And he said, okay, let's quantify this and let's test it. Let's see if this stuff works. And he couldn't get it to work. The only stuff that was working was essentially a trend line, which is basically price action, essentially. But all the other stuff, he could not get it to work. All those people out there, maybe they think they can, but I tell you what, this guy, Bill, MIT guy like Ed Sakota and brilliant mind, and telling you what, man, the reactive technical analysis, there's a lot of wisdom there. And it started long before Mike and Steve today.
Peter L. Brandt, one of the unknown market wizards, he said the only value in technical analysis, the McGee, the traditional chart patterns, is in the risk-reward ratio you create at entry and the trends you can follow out of it. That's the only value in the traditional predictive technical analysis.
And I'm sure he quantifies everything. I mean, I'm sure he's, yeah, absolutely. Okay, let's jump into number 8, which is the book which some people could arguably say is number 1. It's been around a long, long time. Reminiscences of a Stock Operator by some guy named Edwin with a French last name that I probably can never say correctly. But basically, Jesse Livermore wrote this book. They put some other guy's name on the cover, and for whatever reason, and it came out when? I don't know, 90 years ago? I don't know, something like that?
I think it was early 20s. Almost a century old, almost.
And I don't know if I told you this. I went back and I bought the Saturday Evening Post because that book started in the Saturday. You could buy these things on eBay, so it's really cool. I don't have them all, but it's really cool to see those. And then they got made into a book. This is a very different book than all the ones we've talked about so far. And it's very different, I think, than all of the other 9 because it's really a narrative. And it's like every sentence is a famous Wall Street precept, like every sentence.
Most quotes that people use as gospel is in that book somewhere.
Yeah, I mean, every one. Now, here's the funny thing, though. I tend to think, and I've done this exercise, go back and find all of the Wall Street and speculation books that are available and have been scanned onto Google. And I've done this exercise. You can find late 1700s, all across the 1800s, early 1900s. There's a tremendous number of books that came before Livermore's book that, damn it, they sound the same. I mean, it's like this stuff is timeless. You start to go like, what the heck is going on here? I'm reading some book from the 1850s. I'm reading some book from the 1820s. It sounds like Market Wizards or Covel's trend following. What the hell's going on here?
Like a grand conspiracy of profitable trading.
Now, Jesse Livermore, you probably know more than me, but he's got an interesting personal story. Even though he was considered, if not the best, one of the best speculators ever, his personal life was kind of a disaster, wasn't it?
Yeah, it looks like he suffered from some kind of manic depression is what it looks like. His son and I think his grandson, Jesse Livermore III, all committed suicide from what I can gather from public records.
Yeah, I think there was a lot of, I think he definitely understood the concept of trend. He definitely understood the concept of taking a loss, riding that trend, but it sounds like he was just damn too aggressive on the money management side.
Yes. I don't think he respected the mental risk of ruin or the financial risk of ruin because he was just his strength. And you see this with so many even modern day traders that their strength is their aggressiveness. So when they make a killing, they're like, oh my gosh, he made a killing in the market. Their same weakness is they can also blow up just as spectacularly. The difference between Victor Niederhofer and Michael Burry was just a little bit of timing on whether one was a market wizard and one blew up. Especially position traders that go so big. I think that's really what Jesse Livermore was more than anything, was a position trader of trends. And he went too big and he held too long when they went against him.
Vic used to, 20 years ago, or maybe a little less than that, Vic spent a lot of time trolling the hell out of me. He did not like trend following. We would battle it up back and forth. And I tried to get him on the podcast multiple times. No axe to grind or anything. Anyone that listens to this podcast knows I'm not out trying to hurt anyone. Everyone's got a story. Everyone's got a message. I'm a curious guy. Vic Niederhofer is obviously a very smart guy. He's had some ups and downs. No one can doubt that he's a very smart guy. So yeah, I tried to get him on. Maybe I should reach out again. I don't know what he's up to these days.
He does a YouTube channel now.
Does he?
Yeah, he contacted me. Well, his helpers did.
Well, maybe I'll reach out and see if he wants to come on.
Last thing I would like to say about the Jesse Livermore thing is people try to dismiss him, saying, oh, he killed himself. So, they try to dismiss all of his wisdom and everything he did. I mean, the guy adjusted for inflation like $1 billion during the crash, and he didn't die broke. He did have a trust fund he set up knowing his own weaknesses. And to say that Jesse Livermore, because he killed himself, dismissed his accomplishments or success or principles is like saying that Ernest Hemingway killed himself, dismisses how good of a writer he was. I think I got that from Richard Wiseman, but I think that's what people need to realize.
Yeah, there's a logical fallacy there. And I wasn't implying that his personal life was rough and we should take something away from that. I think what one can take away from it is how does one try to avoid the same path? That's what you want to take away from it. Not to necessarily say he's a bad guy or anything. How do you avoid that? Who the hell wants to commit suicide?
And your other people have said that. I wanted to say that in this interview because other people always say that to me, and it's just ridiculous to say something like that.
Yeah, I mean, look, if you buy Reminiscences of a Stock Operator and you read it and you start to underline everything that's interesting, which will basically leave you underlining every sentence in the book, then if you say to yourself after you read the book, oh, well, that wisdom was shit because he killed himself, so I'm going to throw the book out. Well, you've got a mental defect too.
Yep. Fully agree.
Not you, Steve, but the guy that's thinking that. Yeah.
Yep.
Well, let me go into number 9. And again, I did not pay for this. And I think that even if my name was not listed as the author, I think knowing you would have wanted to have a turtle story as a book in your list because let's face it. And what I'm talking about right now is my book, The Complete Turtle Trader, How 23 Novice Investors Became Overnight Millionaires. That title alone tells you something because the short story, trend following book about trend following traders. But the key damn thing was a very wealthy guy said we can take people off the street and we can teach them and we can give them rules and they can go trade our rules and make money. And so nurture trumped nature. What did you take away from it? What's your big takeaway on the turtles going all the way back in the day? I'm sure it's similar.
Yeah, I learned so much. It's like I was learning with the turtles when I read that book the first time long ago. It's amazing when Richard Dennis and William Eckhart, which have some of the greatest trading quotes ever created from those two, actually are teaching them. So you can learn along with them and start understanding the dynamics of if you were there. People that love The Big Short or love Michael Lewis books or love Trading Places, the movie, I mean, you'll love this book. This is just a phenomenal story and narrative that also embeds the trading lessons you're learning from the legends themselves, the Market Wizards. I think they both were in Market Wizards book. Dennis was in the original. You can learn from them. And a lot of their little turtle babies went on to be successful money managers themselves.
I actually think that, and maybe one day I'll pull it off, it's just a lot of energy and it's a lot of effort. I want to, but it hasn't happened yet. In terms of a story that should be on the big screen, and I've said this to Jerry Parker too, The Big Short doesn't hold a candle to the Turtle Trader story. It doesn't hold a candle to it. The drama, the ups and downs, what took place with the turtles, how it took place, the performance, what happened after, the teachers of the turtles. It is just, you read it and you're like, this is freaking fiction. This didn't happen. And then you say, it happened. It's crazy.
Yeah. It's one of those things you just can't believe it exists. It's just an amazing story that actually happened. And you really were brilliant to see the story and make it mainstream and tell that story to everybody.
I'll share something with you about that book. When I did it, I think I've said this on the podcast before. When I did that book, it was coming on the heels of my first book, Trend Following. And the publisher, HarperCollins, gave me a lot of money, which I'm thankful for. So I started working on the book. And the first book, Trend Following, did really well. HarperCollins gave me a lot of money. I pretty much had carte blanche to do whatever the hell I wanted to do. About the turtle story, they knew that. And I believe the editor at the time was the guy who had brought Market Wizards forward. But then he left HarperCollins. Then I started getting passed around to editors. I don't really think a few people knew what it was, but most didn't. So I put together the first draft. HarperCollins came back and they were like, this is terrible. I did it in the same kind of model as trend following. So I did it a little more like a textbook, let's say. It was not a narrative at that moment in time. And they're like, okay, you can't write. This is terrible. We're hiring a ghostwriter and they're going to write the book and you're having nothing to do with it. I'm like, whoa. I don't know what the hell's going on here. This is not happening. And I said to him, I said very clearly, I said, what do you want exactly? And they said, we want a narrative. Okay. I said, what's the deadline? And they said, oh, it was like 90 days. Like, okay.
Jeez.
And I wrote that book in 90 days.
It's amazing what you can do when you have no choice and you have to get it. You have a deadline.
Yeah. I mean, I had to also figure out how to do a narrative because I had never done one, so, it was like, oh shit, what is this? Seriously, just imagine if you are an individual out there and you don't know what a narrative book about traders should look like. And imagine you're being told by a very large, successful publisher that's what they want after they've given you a lot of money. And I don't know if it was mean threats, but it wasn't happy threats. But it worked out okay. It worked out okay.
Yeah, you did okay.
I tell you, it's a fantastic story. I mean, there's so many things happened in that book that was just fabulous. I think one of the things that happened later on in the process of writing that was I met somebody who had the performance data of the turtles while they were in the program. And so here I am putting the book together. I've got all this information that makes perfect sense. It's all sourced either through interviews, firsthand interviews, or all kinds of sourced information with direct from the source quotes. I mean, there's a ton of firsthand interviews that I did for it. Then I got the performance data and it was like, oh man, this is like putting like truffle caviar on top of chocolate cake. Cause it was like, wow, it proved everything. Because here I had these folks, I'm interviewing some of the turtles. They're telling me XYZ performance happened here. And here's how much money we were trading. This person had money taken away from them and it was given to this person. And I'm thinking to myself, oh shit, how can I prove this? I got to trust them. I mean, okay, I can go to print trusting them. They're all successful people. Well, not all, but most of them are successful people. And then I had the performance data. I was like, oh my God, all of their words are now proven in the performance data, because the performance data was not only the ups and downs of the returns, it was the equity they were managing. And that was fascinating.
I'm one of the few people too. I find the equity curves and the returns that you posted in your books fascinating to watch and look at.
Yeah, it was so cool. I'm working on some turtle projects right now. I've got some things in mind that might surprise people. So we'll see how that goes, but we're winding down. Book number 10 on the list. How I Made $2 Million in the Stock Market. I think I found out about this guy from you. I'm pretty sure. Or I'd seen the name, but I didn't register what the hell he was or what he was doing. I thought it was like a flim-flam thing. How I Made $2 million. And then I saw he was a dancer and I was like, oh God, I'm not reading this. This looks entirely silly. Then I found out, lo and behold, the dang guy is a 50s trend following trader.
It's crazy, once again, that exists. Like you, I passed that book over hundreds of times when I was doing all my research, getting the top trading books 16, 17 years ago. I kept seeing the reviews and kept on and on. It's like, well, good gracious, I'll just read. It's a short book. I'll see what the heck this is, because so many people recommended it. It was such a good book. I think I actually got it from William J. O'Neill. I think it's one of his 5 books he recommends. I was like, what? Then I looked at it, and somehow Nicholas Darvis stumbled onto trend following. Originally, he was a pure trend follower. He didn't even use. Later, he did write other books people do not know. He did write another book called Wall Street, The Other Las Vegas. You Can Still Make Money in the Market. He wrote a book about success. After he made his money, he retired and was just writing books and enjoying life. He died pretty young. He stumbled into, because he lost money so much, he started figuring out a way to make money. And it was classic trend following breakouts of ranges. He called them boxes, but he would buy breakouts and he would ride winners with trailing stops as long as they didn't lose their trading range. And he accidentally got into some monster stocks. I think One was rocket fuel when they first came out in the late 50s. I think one was filtered cigarettes, and I think it was a takeover. E.L. Bruce, I think, was like some kind of maybe it was a laminating floor company or something, but it was a takeover. They're trying to buy up the stock and take it over. He didn't really understand what any of them did at the time. He was just letting the winners run. It was this crazy story. It's a great story, sort of like Jesse Livermore, how he just made a fortune just doing, like you said, it's absolute classic trend following. He would sleep during the day, dance around the world, get telegrams and trade through telegrams with the old style full service brokerages, paying a fortune for trading fees.
And you might need to clarify that so people heard you right. Dance. He was a professional dancer.
Yeah, he was actually pretty famous as a professional dancer at the time with was it his sister or cousin? I think he might have been Hungarian. I think it was Eastern European.
A trend following success story. I did a monologue on this podcast. I don't remember what number it was or whatever. Somebody can figure it out by searching. I searched for my own podcast on Google to find out when I want to, things that I've done on the podcast. I can't remember. It's too many episodes. I think I do recall the date of the Time magazine article. I think it's 1959, I believe. You can go buy this, and it's worth buying, actually. Go to Time's website, Time magazine, search for Nicholas Darvis. Cost you a couple of dollars, maybe $5 to buy the article. But there's some great, and this is like from 1959, I think, some great trend following quotes in that article. Maybe it's free out there, whatever. Time wrote it, so I don't know, I paid them. It's just so cool because you see his quotes and you're like, okay, trend following 101, 1959, and it's timeless.
It's shocking. It was really stunning to read the book. Actually, a lot of the principles, it was incorporated into William J. O'Neill's system. It's fascinating. He also used the Wall Street paradigm, the casino paradigm, in explaining how Wall Street can rip you off trading in it and all the people that have their hands in your pockets in his other books. It's one of those stories that's just hard to believe it's real. And he goes very detailed. His book is detailed on when he buys, what he buys, how long he lets it run, what the price was. Of course, it's still in fractions for the stocks and how much he made and how he compounded his gains and how he went to cash in a bear market and he hated to go short and didn't trade in bear markets. He was a bull only.
I'm trying to think of some honorable mentions. Of course, the New Market Wizards. We mentioned some of Jack's other Market Wizards books, but the New Market Wizards with Tom Basso, the first place that I heard of Tom, that's a great book to get, which also, there happens to be a new book out about Tom if you want to check that out too.
Stan Weinstein's Secrets for Profiting Bull and Bear Markets. I think has a bunch of moving averages in there and crossovers that's really fascinating.
Bruce Babcock had a lot of books on trading that were really interesting. Gerald Loeb had some interesting books way back in the day.
Yes, classics.
There are some titles out there that you can dig around on. I have to say, if you do the exercise, I mean, you've probably done it, but for people listening, the exercise of finding some of these old speculative books out there, it's nothing fancy. They almost all read like Livermore stuff. It's just like every sentence is like gold. Every sentence you could put on an 8.5 by 11 flyer and put on the wall.
Yeah, they didn't waste words either.
Yeah. Well, I tell you what, let's end it on one thing. We were talking about it at the beginning, and I forgot to say why I loved it so much. You mentioned Paul Tudor Jones' Trader, the film, the documentary film, why you liked it. I think the reason I liked it was the, not a big drinker or anything now, but he was just drinking a Budweiser, which was fabulous. Like, so here's this like trading documentary with this great trader, and he's like just drinking a Budweiser at like, I don't know, 2 a.m. or something. Maybe that's why he doesn't want it out there, but it's great, man. It's like, he's so,
yes.
I mean, he's got to know by now that this thing humanized him in such a way. He has to have done some kind of polling that he doesn't really get pissed off that people watch this thing. Cause he's got to know that every trader out there that sees it just goes badass. Everyone goes, that's cool. No, Nobody thinks it's, now the only thing that might be funny is some of the clothing from that time period in the 80s. I gave Peter Borish a little bit of crap for what he was wearing in that film, but it's great. It's great.
Yeah, it's classic.
That could probably even go in your top 10. It could either be number 1 or 11. Who the hell knows? But it for sure deserves to be in there.
Yeah, I put it on my top 10. I think I put it on my number 1 trader documentary.
Yeah. Speaking of that, we can stay there for a second. One of my favorites is, what is it? Is it called $1 Trillion Bet? Mm-hmm. The one on LTCM. It was like done on PBS. Oh, that's great. That's great. Great quotes in there. I mean, I'd use several quotes in there in one of my books. It's fabulous. Great insights. Well, cool stuff, Steve. Anything we missed today? Anything else you want to add?
I think we did a top 10. I mean, that's the filter. I mean, I did the research. I read cover to cover over 400 trading books and counting. And a lot of the new ones, there's real popular ones that come out that are top 10. I think, well, I'm going to read these best-selling trading books now, the modern ones that are made pretty much for Kindle size. Most of them are just not worth the money. I mean, these are the 10 classics.
Is it because of a lack of depth? Is that what they're doing? 20 or 30, 40,000 words, they're not putting in the work? Is that what's going on with some of the newer titles?
It's almost like they're not doing the research. We have the foundation of what everybody who's come before us. You have to learn from everybody previously and then add to that, filter it, change it, show what works, and then add your own stuff in with it. But so many people are starting from scratch and they're not doing the homework. That's what William J. O'Neill says, that most people don't make any money in the stock market because they just haven't done any homework. And this is the homework.
I agree. You've done a good job. I think people will appreciate the insights. And I think hopefully if they've not seen these books, they'll pick them up. And if they have seen them, then they'll buy them for family and friends.
They can change your life.
Steve, you're easy to find. Steve Burns. I think actually your name, the way that you have built your social media profile out, you probably come up, even if you just say Steve Burns and it's not anything to do with markets or trading. I'm sure it probably comes up pretty quickly, doesn't it?
Yeah, me and the Blue's Clues actor's name is Steve Burns. So me and him are battling for top of Google search now. And I think they mix up my trading quotes, my own original trading quotes, with his quotes. He's also a musician. So me and the Steve Blue's Clues guy, we're at the top of the search, and I'm overtaking him in many areas.
Where can we send people? What's the best website to send people to check you out, check your work out, check your books out, check out everything you're up to? Where would you like to send people to? Again, if they can't figure out where you are, they're probably defective. You might not want them following you if they're defective. Like, who wants defective people following them? But for those people, just to humor them, where should we send them to?
Yeah, my main hub website is just newtraderu.com. So it's just a letter U, newtraderu.com. And then all my social media and connections to my books and e-courses and social media is all there.
Steve, cool stuff. I appreciate you coming on again. You've done a handful of these shows on this podcast since 2012. I appreciate you continuing to trust that I will attempt to make you not look bad.
It's definitely my favorite to go on. I don't go on much anymore, but I'm always up for a talk with you.
Cool stuff, Steve. I appreciate it, man.
I appreciate you having me again, Michael.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.